Folks, today we're going to talk about how you can supercharge your profits with top electric vehicle stocks. Now, this year is finally coming to an end, and what a year it's been. No one could have predicted 2020 or the events that took place, but one thing we do know for certain is this. Electric vehicle stocks have been moving higher at a lightning fast pace. Some of the top companies in the electric vehicle or rechargeable battery segment are up as much as 10 times or more where they started in the beginning of the year or compared to where they started in the beginning of the year. What's equally amazing is the fact that traditional energy stocks have underperformed the overall market and some have taken big losses to boost. There's just no way to deny it. The shift from traditional energy and combustion has continued to build momentum, and there's a good chance we'll see similar type of momentum going into 2021. What's remarkable is the fact that the vast gains we've seen in EV stocks came during the time when Republican-controlled economy typically favored traditional energy stocks. If in fact Biden does take office in January, which seems to be the scenario right now, there's a good chance that the regulatory environment will be even friendlier towards non-traditional energy sources. And that should cause more upside in one of the best performing sectors on Wall Street in recent history. And that's why today I want to focus on a few electric vehicle stocks that offer strong upside potential in comparison to traditional energy companies. And most importantly, these stocks are poised to trade higher regardless of the political climate. Matter of fact, electric vehicle related stocks are showing a strong global growth, and that's causing a massive disruption in traditional tech that should continue moving forward over the next few years and possibly the next decade, if they continue to move at the current rate of growth they're experiencing. So the first stock is XPeng. XPEV is the ticker symbol. That's XPEV. It started trading recently in the US. It manufactures and markets smart electric vehicles principally in China. It offers autonomous driving software system. On November 12th, the China-based firm posted strong quarterly results that send us up 33% in one day, while revenue more than tripled, up almost 343% year over year to $293 million. The company's got almost $1.8 billion in cash and cash equivalent, which will alleviate any fears of a credit crunch. The forecast for the fourth quarter for XPEV vehicle deliveries is around 10,000, which is almost a 211% increase over last year. 1 year return is 175.82%. Momentum looks really solid for the stock on a technical basis. Expect more upside in the near term. The next stock is one we've talked about before. It's NIO, ticker symbol NIO. NIO is a premium electric vehicle market stock. The company designs, jointly manufactures, and sells smart and connected electric vehicles. On October 2nd, NIO's strong September delivery sparked a rally in the stock. The China-based company posted a 133% year-over-year growth in the unit deliveries for the month, which is crazy. Moreover, of the 4,708 vehicles delivered, 3,210 of them were the new model ES6. Later in the quarter, NIO impressed the markets yet again when it posted just over 100% year-over-year growth in deliveries for October. Also keep in mind, China appears to be getting out of the COVID mess as the region is thriving with consumer demand and disposable income. J.D. Power's already named Tesla as the lower quality vehicle for 2020. And that means NIO is being opted over Tesla in China right now. This trend may continue for some time, and I wouldn't rule NIO out of the EV race car yet, or the EV car race yet. I said that backwards. Earnings per share growth versus previous quarter, 12.5%. And that's based on really strong estimates. Earnings per share growth versus previous year, 57.58%. The stock is beating earnings surprises, and estimates several quarters in a row have been super positive. We'll see price hit $75 per share before the summer of 2021 in momentum levels stay near the current range. And finally, on a sentiment level, if you look at NIO over the last 10 years, electric car stocks tend to do very well in January and February. of a year on a cyclical basis. So there's good upside potential over the next few months. Keep your eye on NIO as the leading EV stock for the next few quarters at least. Folks, a lot of big gains just happened. And if you were following the usual Wall Street suspects, chances are you made the wrong move along with 99% of the traders around the world. You see a ton of capital is being poured into the stock market on an epic scale. But that money isn't coming from Wall Street. Nope, it's not. It's coming from one simple app that millions of people all around the world are carrying in their pocket. Want to get ahead of the next Robinhood capital flood? Click on the link below to learn how to do it now.